morning, welcome to 3 Minutes on Markets and Money. I'm your host, Lance Roberts. The S&P today actually going to open up this morning. Now, that's good news because we are going to trigger this buy signal that we've been talking about here for the last really couple of weeks. Market really hasn't gone anywhere during that time frame, really had just been this consolidation. This is about what we said a month ago when we triggered this sell signal. Originally, we said markets really aren't going to go anywhere as long as money flows remain positive, which has occurred. Typically suggests that markets are going to consolidate. Exactly how that's turned out. But now we're starting to see buy signals really clip up across the board here on several different areas. As we talked about on Thursday and Friday of last week, the Nasdaq did trigger its money flow buy signal and has been actually trying to rally here a bit. Today, the Nasdaq is going to be positive. Can it get above the 20-day moving average? That's going to be the real issue here. Both of these buy signals on the S&P and the Nasdaq do suggest that a trip back to all-time highs is certainly very likely here. Probably not much more than that. So that suggests that the Nasdaq is likely to outperform the S&P here over the next couple of weeks. Already, with just 3 days of a rally kind of behind the Nasdaq, we've already eaten up about a third of that buy signal. Again, as we've said before, that buy signal is going to occur very quickly, and that's going to start to align with our weekly buy signals, which are very close to triggering a sell signal. Probably sometime June, July, we're going to start to see that next leg of the correction. Probably somewhere between 5 and 10% sell-off in the markets. Certainly would not be surprising, considering that the last time we had a 5% correction was in August of last year. So that's now one of the longest stretches kind of in the S&P history of a period without a 5% correction. So again, we get to somewhere around June, July, start to look for a little bit bigger correction. One other area that's also getting a buy signal are bonds. Now, bonds and stocks have had a very high correlation. In fact, one of the highest correlation levels since 1999, if that tells you anything. And of course, when we take a look at Treasury bonds, those also are, interestingly enough, starting to trigger a buy signal. That buy signal on Treasury bonds suggests that we could see bond prices move up here as we begin to trigger the signal. Now, the reason that this is important is because not only are bond prices now correlated to stock prices, which that should not be the case, but that also suggests that if bond prices are moving up, that means that the 10-year Treasury yield is moving downward. And currently, of course, weaker Treasury yields have a very high correlation with economic growth expectations. So all of a sudden, we start to look at the fact that yields are starting to tell us that economic growth may not be nearly as strong as what headline expectations are. That's going to have an impact on earnings expectations moving through the rest of this year and into 2022. Another reason that we could start to see stocks really struggle here over the course of the next couple of months as stocks start to kind of reprice both peak earnings growth and peak economic growth as well. I'm your host, Lance Roberts, for 3 Minutes on Markets and Money. We'll see you tomorrow.